nothing I can do. I feel so bad.
All right. Okay, so hi. As you guys know, this is Lisa. So I really continuing our series, because a lot of clients and potential clients have come to me, and by the time they get to me, they're afraid to ask questions, even though I'm sending them to people that I've worked with that are really, want to make sure that they have their questions answered. So I decided to do this series because of that reason. And I think that it's important. So because I believe people need to have options, I never will say, hey, that person, because it's about who you're going to fit well with and what programs they may have for you. So, in total transparency of that, uh, this is why I'm doing it. And so, I think that people need to be educated, and because so many of the potential clients, these are not clients that they weren't my clients yet. They were potential clients. Kind of just walked away from the process because of fear, because they felt like even though they got to this point, they gave up because they felt like their questions weren't being answered. So what I decided to do is to ask the questions for them. And therefore that'll get started, and then they know that they have a resource. All right. So
Love it.
with that being said, I said a little too much, but with that being said, I would like, first of all, for you to introduce yourself, and then we're going to start with the questions. When you see me, I will be in and out because I want them to see all of you. Are we
Sure.
clear?
Perfect.
Okay. All right. So if you can start just by introducing yourself, what your name is.
Yeah, grateful, Lisa. Thanks for including me. I love hanging out with you. So this is a great partnership, and I think when two people work together to take care of folks and help make good decisions, it really helps the process for sure. So I'm Jason Lerner. I'm an executive at United Bank Mortgage. This is my 22nd year of being a mortgage guy. I think I've helped more families than anyone in our area. Give till it hurts, ride or die, MBA, really study the market and take great pride in not just getting someone into a home, but really creating that foundational wealth, helping someone build something. And there's really not a better tool in this economy than house buying. And I feel like it's my job to make sure people make the right decisions and that they get the best possible financing available and take great pride in it. So Jason Lerner with United Bank Mortgage, and
Okay.
absolutely give till it hurts. Yeah.
All right. So the first question, can you tell us a bit about your background and how you became a mortgage broker or lender, depending on what you are? Please, if you could do
Yeah.
that.
So this is again 22 years for me. What started for me, so I was actually before doing this, I was assistant athletic director at UMBC 22 years ago, and was buying first house to start my family. I was relatively newlywed. My wife and I were buying a home. Had a background of understanding numbers and really trying to do something to build something for my family. So went through the mortgage process, and it sparked something in me. I really felt like my job at UMBC, I took a lot of pride in helping create opportunities and create scholarships for athletes that wouldn't have been able to get an education otherwise. That was something that kept me. Any job that I've had to have like this greater good that I'm contributing to, and really felt like I could even contribute more through being a mortgage guy, and really, felt like that was a calling for me with my background. So for 22 years, been helping families ever since. And that was it. I really felt like it was that combination of caring about my clients, but also really understanding not just the numbers to get someone into a home, but seeing the big picture of an economy and helping them make good decisions and make long-term plans. And I've only been at two companies in the last 22 years. That's my nature, is I'm a, grind it out and work hard and make sure I'm doing what's best for my clients. But that was it for me. It was, seeing that this is probably a way to really help the most amount of people. And the numbers worked for me, and felt like, clients weren't getting the right education kind of going into it. So that really spoke to me as well too. So it's been a passion for me since then, and really, really feel like this is where my career is going to be for the rest of my life, for sure.
So you just said the UMBC. A lot of people may not know what that is because we're going to reach a lot of different people. So could you
Sure.
tell us I know we live in acronyms, so we
Yeah,
need to
yeah, I'm
get that out.
sorry.
Yeah.
The UMBC specifically is the University of Maryland, Baltimore County. So I was
Okay.
working in the athletic department. My job was again creating funds to be able to create scholarship opportunities and promote athletics.
Okay. So the next question, what do you enjoy most about your job?
Yeah, so for me, again, even before the UMBC position in athletics, every job I've had to be like I was making something better for people. In fact, I think I was supposed to be a teacher. I was raised by a teacher. My mom's a teacher. I've got family members that are teachers, and
Mhm.
actually, I think that's probably I've got the heart of a teacher. So I think that's part of it for me is I enjoy making sure that people make really good decisions. At least it's a rough crowd that you and I run around with. There's not a lot of good realtors. There's not a lot of good mortgage folks. So for me, that's the part that I enjoy the most, knowing that we're doing something a little bit different than maybe what some of the other realtors and lenders are doing by making sure people not just get into a home. A lot of people can help someone get into a home, but do it in the way that's the most financially responsible and also creating this legacy for your family, really creating a wealth position. Some of the people I know who are the wealthiest started their career with real estate, buying a home. People, you can't outsave the real estate market, right? I mean, even if you saved a little bit of your paycheck every month, you're not going to be as in a positive position like you would be by buying a home. So that's the part I love is that I know, every time someone buys a home, it's one more step closer to that long-term financial wealth, whether it's your first home or maybe, even someone who's buying their happily ever after dream home. I know I'm playing a role in creating financial stability, and that's the part that I love. Really educating people and making sure they're in the best darn position they can be in.
Okay. Thank you for that. So, what are the current trends in the mortgage market that buyers should be aware of?
Yeah. So, of all the 22 years that I've been doing this, the last three have probably been the most hardcore, toughest for someone who's trying to, especially buy their first home. And I think that's a trend that's going to continue. So I think more than ever, the folks that you hang out with, picking the right realtor and picking the right lender, someone who's ready to kind of go to battle with you a little bit and be your partner throughout this process. I think that's important. The trend, and it's really this kind of never ending, tidal wave that's coming is that home values are going to keep going up. I think it's, the history has shown us that, again, I think throughout my career, there was only 1 year where home values went down. And if you bought during that 1 year when things were at the worst, you
Mhm.
still, if you were selling that home today, you'd still make, multiple return on your investment. It's a powerful investing tool. But again, I think that the time to do it is now. I think that rates may become better later, and payments may go down. But if you wait for that to happen, that same $300,000 home that you might be interested in today, when rates come down, the market's going to be flooded with people interested in buying homes. Demand's going to skyrocket, and then home values are going to go up. So, the best strategy feels like to buy now, even though rates might be a little bit higher than what they're going to be long term. You can buy now at the lower purchase price than what it'll be later, and then we can always get you a lower interest rate later. The way I think about it, so you may not know it by looking at me on this call here, but I'm a CrossFitter. I do 6 days a week, 5 days a week. I'm in there working hard. But the reason I started was because my wife did it first, right?
Okay.
So I was so scared to get started, kind of like the home buying process. I felt like I had to get in shape before I was even going to go get in shape, if that makes sense, right? I pictured my wife in there with big sweaty dudes flipping tires with their shirts off. And I felt like I had to do my own work to get ready to go into CrossFit. So I worked for months before I even signed up.
Right.
And then I show up, and it's a bunch of chubby soccer dads like me. So to me, that's my feeling. So what the trend is, and my best advice for someone is don't feel like you have to get in shape. I'll be your personal trainer before, the day you walk in the door is we'll get you in a position to buy a home. And often you're good enough to buy a home and you're good enough to start now. So that's the part that I tell people to be aware of is that I think it's only going to get more challenging for the next several years. And rather than trying to wait for things to be perfect, because frankly, they may never be perfect. This is me 10 years later after starting CrossFit, and I'm far from perfect, but I'm definitely better than I was when I started and better than I would be if I waited to start. So I think the most, you know, the most call to action would be is to just roll up your sleeves and do it, and hang out with the right people who know that they have your best interest, and it'll all work out. So don't wait for your credit score to go up. Don't wait for interest rates to come down. Don't wait to save money. Get as much information you can today and see if it's a right fit for you today, instead of waiting for when the financial climate might be a little bit more challenging later.
Okay. So how do you see the market evolving within the next year?
So I think there's a lot of important things to be aware of. So there's a lot of kind of moving pieces in our real estate world right now.
Okay.
The biggest things that I wake up and think about are definitely the interest rate environment. I
Right.
think one positive thing that's going to happen is that interest rates are going to come down.
Right.
That's positive in terms of monthly payment, but again, might be a little bit um, force the home prices up. So I
Right.
think again, it's good to kind of take action now. The other part that's changing, and this is where Lisa, you're the expert, and you can give some guidance too, is kind of the way that some of the way that realtors are being compensated, and
Right.
some of the things that are happening in that world. But
Right.
again, if you're hanging out with realtors and lenders that care about you as people, there's going to be solutions for any of those
Right.
challenges that we're talking about.
Right.
I've got solutions for interest rate. You've got solutions for
Right.
the realtor part. But I think in the next year, home prices are going to continue to go up. Interest rates are going to come down. But there's going to be this time right now, like the when people are hopefully watching this the first time,
Right.
this might be the perfect kind of storm of opportunity. Um, I think that the waters are still a little rocky, but they're only going to get rockier. And you and I could be their captain and navigate through these rocky waters with them for sure.
So a couple of times you've already mentioned the prices of homes going up. Can you just kind of expand a little bit on that for the regular person that's trying to understand what you're really saying, like in plain language, right? Because you're saying, okay, you may not have the perfect credit score, you may not have the perfect this, you may not have saved enough, but there's this other factor that's out here. Can you expound a little bit on that, please?
Yeah, yeah. So, one of the things I do love about my job is it's all numbers. It's black and white. These numbers, they don't lie. It's, here's what your payment is today, here's what the home price is. And with that in mind, I do think that, everything is based upon, supply and demand. The more supply, meaning how many houses are available, the lower prices are. Well, right now there's very little supply. So now you've
Okay.
got higher demand, and people are looking to buy those homes. And if interest rates come down as projected, more people are going to demand those homes. So the more people who are looking at the same homes you are, the more you're going to have to fight. And fight means, unfortunately, that you might have to pay more for it.
Mhm.
Um, it feels like right now that any home that someone falls in love with, there's going to be at least maybe one or two other people that fall in love with it. Although, Lisa, you're so talented at finding the right property that there might be some gems out there that you could find for them. But in
Right.
general, it's going to be the home that you love. Someone else might love it. And I think that, throughout the next few years, there's going to be more people falling in love with the same homes. And I think
Okay.
because there's going to be this competition, that
Sure.
means you got to pay more for stuff.
Okay.
And I think that's going to happen. I think there's going to be lots of folks trying to chase the same few homes. I do think there'll be more homes available when rates come down.
Right.
There's some families that like have a low interest rate right now, and they feel like they're trapped in a home they don't even really like because their rate's low. Well, if the rate becomes a little bit lower, I think they're going to be able to get into some of those homes and feel more comfortable putting their home on the market. But in general, I think home prices are going to keep creeping up. I've seen it personally with families that I've helped, where we helped them buy a home a year ago, and we were looking at numbers now. That same home a year ago has appreciated. For this specific family, it was like 33%.
Mhm.
So it was a home that they bought for 350,000, and it was over 450 is what they think the value of it now could be. That's pretty significant. There's very few things in your life that you can invest in, and or even your own personal income, that you
Right.
could save that amount of money. And we helped them buy that home with very little. In fact, I think they participated in a program where there was no money down. So
Mhm.
now when they sell this home, they've got a substantial down payment to buy their dream home.
Okay, perfect. All right, so the next question is, can you walk us through a typical mortgage application process?
Yeah. And, as formal as it feels like make an application, it is informal, me just learning as much as I can about someone. People feel like if they check the wrong box on TV, they stamp a denied on it. And it is none of those things. I'm on your side. My job is to learn as much as I can about you to make you look as pretty as possible to get you qualified, but also to make sure we're exhausting every program out there that I know as much as I can to make sure I meet your needs perfectly.
Okay.
It's definitely not the client's job to know all the programs. It's my job, and I take that responsibility very personal. So, really, the big things that all lenders look at to qualify someone. So, one of the questions we ask is to learn more about someone's assets. And again, that of all the questions I ask, that answer could even be very, that they don't have assets, because a lot of times there's programs that can solve that. But I still have to understand what that is to make sure I know what program there is.
Right.
The other things that we look at, we ask questions about someone's date of birth and address, excuse me, so we can pull their credit.
Okay.
And same, I've had clients say, well, I'm going to wait 90 days to get my credit score higher. They come back 90 days later and their credit score is higher, but the rates went up and their payments worse at a higher credit score than what it was before when we first started talking. But credit scores, same. There's programs that get someone virtually the same interest rate if they have a 620 credit score versus a 720 credit score. So there's really not this need to be perfect. You don't have to go and get in shape before getting in shape. I'll help you get in shape when we talk about the credit score part. And then the third most important thing that we talk about, and this might be the most important of them all, is to really understand somebody's income. What the rules say for most programs is they want you to spend a little bit less than, or a little bit more, depending on the program, than half of what someone's income is. So my job will be to understand what your income is, but also what your monthly expenses are. And as long as that number, the new home plus any expenses you have, are less than 50%, there's going to be lots of great programs. And even a little bit, depending on the program, you can go more than that 50%. But those are the biggest things. So I'd say in terms of, hard hitting questions, it's going to be about your income, assets, and credit. And then the documents that we'd love to look at are people's pay stubs, tax returns if they're self-employed, and then bank statements. Those are probably the biggest things that matter the most. But again, each one of those things, if you don't have a perfect situation for any of those three, there's still probably going to be a program that works. In fact, you may not be in a perfect situation for all three of those, and there's still probably going to be a program that works for you. And the application process is really me just getting to know you and understanding your needs so I can help you for sure.
So when you talk about the application process being you getting to know the individual that's before you, does that mean it's very formal in this sense? Like before they can even have a conversation with you, they are filling out an application. I'm trying to address the needs and the questions that I've heard out there and some of the barriers for people.
Well, it's the application is how I know you. You know what I mean? Like, I like to learn about someone's kids and their family and where they're from, just because I want to fall in love with them. I feel so bad. I ask and I tell you about me because I'm asking you. I'm getting all up in your business. I'm going to tell you a little bit about me. Those things are important, but ultimately, making the application is the critical part. But you're right. I mean, some lenders I think say, okay, great. If you want to talk to me, go online and fill this out. Um, from the moment that you recommend a client to me, I recognize how important that is, that you're trusting me with someone that you care about, right? So I work for you, I work for them. I'm not going to say just go to my website. I think website's a very efficient way to kind of get the process started, but I'm meeting with a client in person today. We could do a virtual call like we're doing with you right now, Lisa. We could do something over the phone. We definitely do want to complete an application to best serve somebody's needs. But I met with a family in person earlier in this week, and we didn't make application. It was really just answering all their questions to make sure they felt super comfortable. I wouldn't want someone to work with me if they didn't feel like we were meant to be together. You know what I mean? I want us to be soulmates when we're hanging out here. And I want them to recognize that I've got their best interest in mind. And that might take a meeting or two. Often, though, the process is that, we spend a little bit of time getting to know each other. And then pretty quickly, they do make the application in any way that meets their needs, whether it's online, over the phone, virtually, or in person. Whatever they feel most comfortable is what I'll do to meet their needs for sure.
Okay, thanks. So here's the next question. What are some common challenges applicants face and how can they overcome them?
Yeah. So again, those three kind of things that we look at for application, it's income, assets, and credit. And there's usually a solution for most of those things. So, something called with the income, it's something called your debt to income ratio. And that's just a fancy way of saying how much money coming in versus how much is going out.
Mhm.
Some people think, well, I've got to pay off all my bills. And that might be true, but we don't really care about what someone's balances on those bills are. In fact, someone can have large student loans and that payment is so little that it really we don't even care. Someone can have a very small credit card that has a big payment, and that's something that rather than maybe we have you put less money down and just pay off that credit card to take care of that income piece of it. With the assets, there's so many grant programs available that again, someone could have little to no assets, and we're going to find a grant program that can meet some of those needs. There might still be some money that's needed, maybe as part of your master negotiation, Lisa, where you could, the seller can potentially pay for some of the closing costs. The market's tough right now, but that might be a solution. There are, all programs virtually allow for gifts from family, and that's easy for me to say that somebody's got a rich uncle laying around, but again, that could be a solution. And then the credit score part too. There are some really black and white numbers that someone's credit score has to be over. For
Okay.
most programs, that's typically a 620 credit score. And for a lot of the first time homebuyer programs, well, there's a couple that can even go lower, but some of them are 640 depending upon the program. But
Right.
my job is to, again, part of me getting to know you is to really get to know your credit score. And we'll give you, some strategies to get that higher. So I'm not just going to say it doesn't work. We're going to say, hey, here's a copy of your credit report. Here's the things that might help you get where you need to be, and we'll hold your hand and get you there. So those are some of the challenges that people face making application. I'd say another challenge right now is even if all three of those things are perfect, the market, it's tough out there in the streets right now. Again, if you find if a buyer finds a home they love, it may be one that other people love. So one thing that I do to really make their offer stand out. So as someone who helps more families than anyone in our market, or at least almost as much as anyone, I think I might be more in Baltimore City and Baltimore County, on any given day. I also serve, all of Maryland and all of East Coast, but those are my stomping grounds, and again, help more families than anyone. Chances are any home they fall in love with, the person who's representing the seller is probably someone I know, and hopefully, respects, that I'm working with them, and they're going to really understand that any approval that I give is going to hopefully carry a lot of weight. And man, I'm going to call that other agent, and I'm going to do some serious, serious sweet talking. I'm going to pour it on thick and let them know how much the client, how lovable they are, how wonderfully qualified they are, how wonderful you are as an agent, Lisa, and how you're going to make this process feel good, and then how hard I'm going to work to make sure everything's happily ever after, and how important those relationships are to me. So it's been my experience that for that challenge, and it's a pretty big challenge right now where people make offers and they don't get their offer accepted, that my experience is that hanging out with the right realtor and lender, especially when I call and do some really pouring it on thick, sweet talking, that
Right.
our offer is going to get more weight than another offer that's similar. I
Okay.
mean, if someone puts a big old offer in and we can't compete, there's not no amount of sweet talking I can do to make up for that. But if it's very similar, my experience has been that over and over again, realtors will accept an offer that I'm attached to over, someone else potentially.
So let me ask you this. So we use these terms, right? And a lot of times we have to get really granular with it. So you say assets, and you talked about it in juxtaposition to your income, but really, what when we say assets, what are we telling our viewers that what's an asset for them?
Yeah, great question. For us, really the only thing that matters is here's how much money you need to bring to the table. Do you have enough money to bring that to the table? So it's assets literally mean the availability of cash to bring to settlement to cover things like down payment and closing costs. There's so many programs that can eliminate the down payment and eliminate part of those closing costs. But most programs are going to have a little bit of money that you need to bring to the table or can negotiate with the seller potentially to cover some of those closing costs. But there's always going to be a little bit of that money. So assets is just trying to make me sound smart. I'm really just saying, cash. Really, I was really, and not literally cash, because as a lender, we can't accept, that pile of cash you got hiding under your mattress or in a suitcase somewhere. It has to be cash that we can document by showing that it's in your bank statements, in your checking account or savings account, or in a retirement account, or in a gift that your uncle or grandma's given you.
Okay.
Those are all considered assets that would help you qualify for sure.
Okay. Next question. What advice would you give to someone who's buying their first home?
I'd say that the most important part of this crazy process is to hang out with people who know what they're doing and care about you. There's a lot of realtors out there that know what they're doing and they do not care about you. There's a lot of realtors that care deeply about you but do not know what they're doing. And same with lenders. There's very few that really know what they're doing and care about their clients. And luckily, Lisa, I love working with you and I love recommending clients to you. And I know when clients come to me, they're well cared for. I'd say that's the most important part. And hopefully by the time any of your clients are done hanging out with me, they can check both, they can put smiley faces next to both of those boxes that I know what I'm doing based on all this experience and give until it hurts, but also care deeply. So I think that's the most important advice I'd give to a first-time home buyer is surround yourself with people who care and know what they're doing. The other part, is to just do it, is to Nike it up. It is scary. There's a lot of things that, you're not just walking into a supermarket and buying dinner for the night. It's a lot of, there's some soul searching you're doing. There's some big decisions you're making. But throughout my career, there's been there's been so few times that someone made a mistake by buying a home. Right. Almost always it's been transitional and it's been transformative in their long-term wealth. Right. So really the answer is just do it. Hang out with people who can give you guidance, who can evaluate your situation and help you create a home buying plan. Just do it. If it's right for you and your family, there's going to be no better time than right now. So hang out with folks that care about you and jump into it. Just be ready to go. It's only, unfortunately, history has shown us and top economists are predicting that it only is going to get more challenging, but home values are only going to go up. So I'd say make sure that you work with a lender that understands all the programs that are available to you and just do it.
Okay. So you said to make sure that you have someone that cares about you. So how does a first time home buyer or even someone that hasn't purchased, maybe they're upgrading. How do they know that? What could be some metric that they could use to understand, this may be it, because they've never done it before or it's been a while?
Yeah. So I love what I do and I know you do too, Lisa. And there's so many good people who do what we do.
Right.
Unfortunately, our industry also attracts people who, maybe watch one of these HGTV shows or selling, some glamorous, millionaire or something and think that there's this opportunity for easy money and they're attracted by the thought of money, whether it's there or not. That's why they came into our industry. Right. Where I see it the most, where it becomes the most evident is a realtor that's really pressuring you to buy a home that doesn't meet your needs. If their decision making process is not giving you information, but really just saying, dismissing your concerns without giving you information, to me, that's a big one. I think if someone, doesn't tell you, I've seen you do it where you tell someone, no, this isn't the home that's right for you. And I've unfortunately seen other realtors that won't say that. There's like, hey, let's just put an offer in and see what happens. For a lender, I think it's if they're not giving you options, if they're not talking about, or at least explaining why this is a good option for you and giving you real numbers and giving you, an example of what your monthly payment is. People say, I want to be approved for a $150,000 loan. Well, that 150 is important, but in my mind, I need to make sure you understand what that monthly payment is. That's what's going to affect your family every month, not the 150 that monthly payment is. So someone that leads with explanations and information, and most importantly, giving you numbers to help you make good decisions. Those are the folks that are hopefully going to care about you for sure. It's a rough crowd you and I run around with, so it's important to find the right folks for sure.
So what are some of the most common mistakes that first-time home buyers own? I'm only talking about first-time home buyers tend to make.
Yeah, I think that, so the big picture one, the broad answer to that question is being too afraid to even learn as much as they can. And that doesn't mean even buy now. but to make really good educated decisions. And the only way to make good educated decisions is to start the process and get to know a realtor and look at some homes that are out there and get pre-approved and understand, even if there's not a home that you fall in love with, let's look at an example property to give you an idea what your monthly payment would look like and how much money you might need to bring to the table or what programs are applicable for that. So I think that the biggest big picture mistake is not doing anything, is being kind of, frozen in fear. I think there's no harm in learning as much as you can about the market and about your situation, and then you can make really good educated decisions. I'd say other mistakes that I see once you get past that point and you've learned a lot and you're excited and this is the right thing for you and your family, um, I do see sometimes where people have overspent in other categories in their life. Most frequently I'll see this really big car payment, a car payment that might be as much as a house payment, and that's limited someone's ability to purchase a home. So if you're thinking about buying a home, I would definitely get pre-approved before you buy a car and understand like what an appropriate car payment might be. And look, if you need a car, you got to get to work, you got to handle your business, all those things, but do it with a lender that's giving you a good action plan, that whatever step you're making today falls into your long-term plan. So I'd say it's limiting expenses, and not just, for a credit card, for example, a lender only counts your minimum monthly expense. We're not counting the whole big, balance that's on there. So sometimes people want to pay off their credit card when in real life that money could be better used to save for a down payment or closing costs or pay off something else in their life. So talk to a lender as soon as you can, and they can give you those kinds of guidances. I've also got clients that missed a payment on something right before they started home searching or even during the home buying process. So I would say make sure you're making all of your payments if you think that a home purchase is in your future. Okay. Another mistake is not hanging out with a knowledgeable realtor and knowledgeable lender. I know I keep saying it, but I think that honestly is 75% of the whole thing is hanging out with the right folks for sure.
All right. So how important is the credit score in the mortgage approval process? Because this is a fear of a lot of people. So let's just address the elephant in the room.
Yeah. So first of all, I hate the credit bureaus. I hate everything about the credit bureaus. I see hundreds of credit reports a month, and I see good, hardworking people that for whatever reason their score was lower than I think it should be based on what their history is. And I see other people who kind of know and outsmart the system. And I wouldn't personally give them any money, but their credit score is higher than the people I would give money to. So I think rather than live in fear of what your credit score is, I'd say get your credit report pulled by a lender as part of the pre-approval process. And once we have kind of real numbers, we can help you either say you're good to go or at least come up with a plan. Most frequently is that people are worried about their credit score and they come to me and it's perfectly fine for what they're going to do. Again, there's lots of programs that are out there. If your scores are that, if you've cracked that 600s, there's going to be lots of programs available for you. If you're below that, then we can also help you get higher. We can engage you. And, sometimes, unfortunately, the time's going to fix it instead of like a magic bullet. There's not often a scientific equation that says you do this and all of a sudden you're up 100 points, but sometimes there is, and we can help you with those decisions. So I'd say the most important part is to just get your scores looked at. Excuse me. The sooner you know where you're coming from, the less you're worried about it, and the more you have a plan. And usually it's going to be good enough. Okay. Usually that score is good enough to move forward. Once you crack 600, there's going to be some really good answers for you for sure.
Okay. So what steps can a person take or a potential buyer take to improve their credit score?
So the most important things that go into a credit score, obviously it's paying things on time. Right. So continue to make your payments on time. Some people think they need to pay off some old collections, and that's not always the case. Again, when you work with a lender, we can tell you if that's true or not. Sometimes actually paying something off might at least immediately bring your score down, even though long-term it might bring it up. The other part to be really conscious of is your balances on your credit report. On your credit cards. Okay. So it's not so much that you have a balance, that's okay, but the proportion of your balance relative to what your credit limit is definitely an impact to your credit score. Typically, that number would want to be less than 25% of what your limit is, They'd want your balance to be below that. 33% is good. Once it starts getting higher than that, that can negatively impact your credit score. The other factor when it comes to credit as well too is to limit your opening of new accounts. If you open up a new credit card, it definitely could negatively impact your ability to shop for a home. So I'd say before doing credit stuff, consult with a mortgage person. The thing that people are the most scared of when they come to me is getting their credit pulled. They think it's going to destroy their credit. And the reality is that a lender pulling your credit one time should really have virtually no effect on things. Where the inquiries come into play is, yes, if you made application for a credit card, a car loan, and a home all around the same time, that can absolutely have a significant impact, negative impact on your credit score. But just coming to me and having me pull it once should be nothing. People try to avoid that credit inquiry. And again, if you know that you just had your car looked at for a car loan and a credit card, yeah, maybe we're more strategic on when we pull your credit. But in general, a mortgage person pulling your credit should have very little impact on anything. And it could be more impactful not to have it looked at if you're doing activities that are bringing your score down and not getting guidance from an educated loan person, for sure.
What are the different type of mortgage products that are available out in the market today?
Yeah, so in general, there's lots of programs kind of within the big picture stuff. The big picture stuff, there's FHA financing. So that's a loan that's secured by the Federal Housing Authority. It's an amazing loan. It's a loan that allows us to put, in general, 3.5% down if there's no grant programs that we're using with it. It's also much more forgiving on things like credit score. The interest rate that you can get with an FHA loan is virtually the same whether your credit score is 800 or 620, for example. It's going to be a little bit different, but very similar for sure. It's a program that also is more flexible with things like your income relative to your expenses. So it's, it literally is secured by the government. There's this mortgage insurance that the government provides that, because as a lender, we know that it's backed by the government essentially. It allows us to take more of a chance on a borrower. So the guidelines are much more flexible. There's some pros and cons for every loan that we're going to talk about. FHA has sometimes the mortgage insurance can be a little bit higher per month. Sometimes it has upfront mortgage insurance that makes your loan amount a little bit higher. So there's things about it that are super attractive. There's also things that we'd want to understand to make sure it's the right program for your client. Conventional financing is another one. And that's a loan that for a first-time home buyer, you can put down as little as 3%. For a well-qualified borrower, the mortgage insurance is going to be much lower than FHA for most situations. It's a loan that, for whatever reason, too, a seller looks at as being more favorable than some of the others. I don't think that's always the appropriate bias that some of these listing agents have. But unfortunately, it is one in the market that if they have some different offers, one's FHA and one's conventional, for whatever reason, for sometimes a valid reason, there's a little bit less layers of review for a conventional loan. And then there's VA financing. So that's 100% financing for veterans. So you have to be a veteran or a surviving spouse of a veteran. It's an amazing loan that's going to have a lower interest rate often than a conventional loan would, and also have no mortgage insurance, and also allow you to get up to 100% financing. For rural areas, there's a loan called USDA, which also can allow you to get 100% financing, often at an incredibly attractive interest rate. So those are kind of the big categories of loans. Within those categories, there's also lots of special grant programs. There's a program secured by the state that can give you 5% of the loan amount. So more than enough to cover that 3% down payment. And then that extra 2% can go towards closing costs. There's different grant programs that are out there secured by the Federal Home Loan Bank. There's programs that my company offers that nobody else does. So there's still conventional FHA, VA, or USDA loans, but there's little subcategories that can help with down payments and closing costs as well.
Okay. So how should a buyer choose the right mortgage product for their needs?
So I think the key is to, again, pick the right mortgage person who's going to provide all the information about each of these products.
Okay.
And again, I love my job because, man, it's black and white. Well, here's how much money you have to bring to the table and what your payment is FHA. Here's how much money you have to bring to the table and what your payment is conventional. Which number feels better? Also, long term, here's the pros and cons about each of those. So I think that if a mortgage person is giving them all of the information, it'll help make those decisions easier. Often, in real broad general statements, a lot of times credit score is going to be a dictating factor. Conventional loans are much more sensitive to credit score. So if someone's credit score is towards the lower end of that spectrum we've been talking about, typically an FHA loan is going to have better numbers that we're talking about. And then the opposite, if someone's credit score is towards the higher end of that spectrum, often conventional numbers may be more favorable too. So that's a pretty good determining factor. Or if there's something about the client that doesn't fit perfectly in the guidelines of one of the loans, then one of the other ones make more sense. If we have a veteran who's looking to minimize their down payment, almost always a VA loan is going to be the winner. And then same, if we have someone who's purchasing in a rural area, USDA, and they're eligible for USDA, USDA is a really, really, favorable product as well too.
Okay. So what are the most important things a buyer should consider before they apply for a mortgage?
So I think that, do some research. Like, I can't hide. If you Google my name, you'll see, 100 reviews. You'll see, I think 150 reviews, whatever it is. There's enough.
Right.
And same, as a lender and realtor, we want people to find us online, which also means, man, you could find us online. If we were doing some of the, if a lender or realtor was doing something that didn't work, you'd probably be able to figure that out online too. So I'd say, man, Google the heck out of any lender or realtor that you're interested in. Look and see how much business that they've done. Look and see how long they've been doing it. Look and see, even be real creepy on Facebook and see if you have common interests. Forget even the professional stuff even. I don't mess around. I get all in somebody's business before I make business decisions here for sure. So I think that's an important part of it. I also think that, company's reputation works too. And then if you're, and depends on what your needs are. If you're a veteran, ask that person, are you an expert in VA financing? If you're a first-time home buyer, say, do you participate in grant programs? Tell me about your grant programs. Right. And unfortunately, I've seen many first-time home buyer programs not get different grants not because they weren't eligible, but because the lender that they chose didn't offer them. And that lender cared more about making their commission than telling someone, hey, your needs are better served by someone else. Unfortunately, I can't meet those needs. They just did the mortgage anyway so they could get their commission. So I think, understanding what your needs are and being very blunt. I've got nothing to hide. If a client's asking me questions about me, about my experience, about what my areas of expertise are, I'm going to answer it. I'm going to be really impressed with that client by asking those questions. Don't be embarrassed. Don't be afraid. If that person gets offended by you asking questions like that, then don't work with that person anyway. They're not that they're hiding something, but they're not going to be the right fit for you anyway. So ask as many questions. Talk to, if you don't fall in love with the first lender or realtor, talk to another lender or realtor for sure.
Definitely. Good advice on that. So any final tips or advice that you want to share with our viewers?
I'd say that it's as good as it's going to get right now. I'd say that, the time is right it's a great time to be alive. It's the market's better than what it'll be tomorrow, and it's going to be better than what's going to be a year from now. It feels like right now is the time to at least learn as much as you can. And I'm not saying go buy a house. I'm saying hang out with experts who care about you and get as much information as you can and make an educated decision for you and your family. Again, over and over again, there's people in my life who have been able to really even break out of like month to month worrying about having enough money, rent going up every month and having nothing to show for it. By buying a house, I've seen people really change their trajectory in life, change their wealth position long-term, build something for their family. I have a family right now that inherited a home from their parents. And that's the catalyst for them to buy their own home right now. They're using the money they're making from that home to do their own thing. their parents really didn't have a lot of other resources in their life. Had they not bought that home, their legacy would be very different for what they're leaving for their family. So I'd say just do it. I really do. Hang out with the right people, get as much information as you can. And if it's right for you and your family, don't wait. Make a good educated decision, and at least don't be afraid to learn and at least take charge of your own path right now, for sure.
All right. Well, I would like to thank you. That's all the questions that we had that I could come up with to ask. But I really want to, we appreciate your time and your availability and just being very candid about, how the process works, what you understand, why you are in this industry, and what you would like to do for families. So I think that that's important. So if there's anything else, that should do it.
Yep. Love it, Lisa. Love working with you. I love working with people who care about their folks, and that's us. So grateful. Thank you, Lisa.
No problem. Mhm.